Yeah, Praveen, you stole a little bit about my thunder. I was going to talk about how to get a loan, but we also deal with non-SBA guarantees as well. But we are actually at Citizens Bank an SBA preferred lender for the different programs that you mentioned just before. I'm the business banking regional manager for Citizens Bank for the Hudson Valley and Long Island market. I think one of the misconceptions is that Citizens is not that big in this area, but we do have 60 branches actually in the territory that I cover. Some of them are the traditional standalone branches. Many of them, though, you'll find in the Stop and Shop supermarkets. We find that actually to be a very successful model for us because it's very client friendly. We can offer the same services as a regular bank would do, except 24/7 almost. We're with the supermarkets, so they're open 7 days a week, so that adds a lot of additional access to customers. Just some other quick facts about the bank. We are the 9th largest bank in the U.S., and we're very heavily concentrated in New England, Pennsylvania, as well as in New York. But I wanted to talk today not really about banking products and things like that. I wanted to actually talk about how is a business in today's environment going to get capital to survive or to grow? As we all know, it's been pretty challenging times the past couple of years, and it's been pretty difficult for customers, particularly business customers, to get capital to keep their business going or to grow their business. One of the key things that Ravina kind of alluded to is when you apply for a loan, you need to know the purpose of the loan. That's absolutely crucial. If you walk into a bank and say, I need $100,000 or $50,000, our area works with businesses that do $1 million to about $10, $15 million in sales, and we'll lend up to about $2 to $3 million. But let's just say the average customer comes in, business owner says, I need $100,000. First question we're going to ask is why? What do you need the money for? Specifically, what are the reasons, what risks do you have inherent in your business, and what are you going to use this money for? If there's no reason, they're not going to get the loan, no matter what type of product it is, no matter how strong the company is. Unless you have a particular reason, we, especially at Citizens, are really not going to lend to you. The days of kind of no income documentation, going in and just getting a couple $100,000 are over. And I think I don't want to speak for other banks, but it's pretty much similar across the industry that, that's kind of a thing of the past, and we really need to be specific and have a business plan. So, some of the things that we hear as well from our clients is, I need a line of credit. And going back to that point, well, what do you need a line of credit for? I don't know, my friend has a line of credit, it's working for him or her, so I figured I should set one up for my business as well. A line of credit is only used for two things, at least that we'll approve them for. It's short-term working capital, but really for two different reasons. One is to bridge a gap. If, let's say, there's a gap between, the sale of your product and service and the time that you're getting paid. A good example is a doctor. They may perform a surgery or see a patient today, but they're only getting, a $20 or $50 copay. The bulk of their money is coming in months down the road from the insurance companies after they, file the claims and all that type of stuff. So, that's a good example of a customer that has a good business and actually needs a line of credit to float them in the times between the times that they actually, perform the service and get paid. The other reason is for business growth, but it's not long-term business growth, and I'll give you an example. The type of business growth that we would give a customer a line of credit for would be maybe for payroll, if you're hiring a couple of additional employees, or if you're maybe looking to buy in bulk to get discounts over the next couple of months. It's not to buy equipment. It's not to buy, some machinery, or, to buy a building. We're not going to approve a customer for a line of credit no matter how solid the company's balance sheet is for that particular reason. That would be used as a term loan or a lease. So again, the purpose is very, very important. Sometimes we hear customers say, well, I'm going to pay it down right away, so that's why I need the line of credit. Regardless, just in case you don't pay it down and it's not for one of those specific purposes, you're going to have to pay down that line of credit at the end of the year. So, and if you're borrowing $500,000 and you don't have those funds, you know, it's tough to come up with 500 grand in a year to pay off a line of credit. So a term loan or a lease would be more appropriate, and you'd have a much better chance of getting approved if the product was more suitable for what you were looking for. Oh, thanks. Some of the things too that we hear from customers is, I want a bank that's going to, you know, jump right in with me and take a lot of risk with me. Guess what? We're not. You know, we're a bank. We're not venture capitalists. You know, our upside is 6%, maybe 7% minus the cost of funds. You know, if we have $1 million in loans that go bad, we've got to book about $150 million in business that year to make that up. You know, as opposed to, you know, a startup company that may be looking for $500,000 that comes to the bank. You know, they may have the greatest business plan in the world, but realistically, we're not going to do business with you. You know, you can go to a venture capitalist who's going to say, okay, I want to sit on the board, I want a salary, I'll give you the $500,000 at 20% interest, and oh yeah, I own 50% of the company in case you sell it a couple of years down the road. You know, our upside is 6%, 7%. You know, after the cost of funds that it requires for us to borrow that money, we're only making 2 or 3% on the money. So, due to the fact that our upside is kind of limited, we're very selective, particularly these days, as far as who we're going to lend money to. You know, and it's based on industry, a lot of it, and it's also based on, you know, more importantly, what the cash flow is that a customer has. You know, that's paramount. Some of the industries that are on our preferred list are CPAs, consulting firms, attorneys, medical equipment suppliers. If you think about it, you know, technology in the medical industry is always updating. So physicians and hospitals always have to buy more equipment, so their products are always in demand, so they tend to have steady earnings. Manufacturers, they have collateral and inventory. We like that. You know, and medical professionals, as in dentists, doctors, chiropractors, they tend to have low overhead, they tend to have loyal client lists, and they tend to have very solid, consistent income because, let's face it, you always have to go to the doctor. You know, you always have to go to the dentist. So those are the, you know, some of the preferred industries that we lend to. You know, if it's a dentist that's losing $100,000 a year, though, we're not going to do business with you. You know, you still have to have solid earnings. Some of the minimums as well that we look at, you know, a lot of customers say, you know, what type of credit score do I need to get approved? Our minimum credit score to do business with us is a 680 on the personal side. In addition, the customer has to be in business at least 3 years and have a cash flow of 1.25%. I don't want to get too technical and talk about cash flow and debt service, but really all that is you take your personal and business income, divide it by the personal and business debt, and as long as it's 1.25 or greater, you know, that should pass our cash flow model. It's a little bit more technical than that, and there are certain things we count and don't count as far as income, and I can talk to you about it over at the booth later, but you know, just for generic purposes, that's what our model looks like. Just a tip, if we have any CPAs in the room or any, you know, business owners who are looking to get assets or you know, to get funding, business income from our perspective is even more important than personal income, because, and so are retained earnings, because it shows that the business owner is committed to his business or her business, is keeping money in the business, and is not just gutting it out and taking it as a compensation each year. So retained earnings and business income is very important from our standpoint. You know, one other thing too is be realistic. We will lend between, you know, up to 15, maybe 25% of your revenues. So $1 million company will lend up, you know, maximum of $150,000. You know, we're not going to lend $500,000 to a company that only does $1 million in sales each year. So just keep that in mind as well. And then last but not least, we are an SBA preferred lender. And there's a misconception, I think, that SBA deals are only for startups. We'll do SBA deals for companies that have been in business for 25 years. But if they're a little bit shaky, you know, if they are a little bit below our guidelines, we'll get the SBA involved to secure and collateralize the deal and get it done. You know, we did one just recently for a chiropractor business that's been in business 28 years. So, you know, we do them for all types of businesses. That's about it. Thank you very much.